Good evening. Welcome to Bossed Up Academy, where we give you all your real estate investing and business needs met. Follow us on IG, Facebook, as well as Instagram. We're going to talk about tonight. A lot of people are coming out of these COVID forbearances, and these mortgage companies are wanting their money. And we're going to tell you what to do to handle this situation so that you won't be stressed out about it. Good evening. So, I want to discuss with you tonight about coming out of forbearance with your mortgage company. A lot of people took the COVID relief. A lot of mortgage companies reached out to people and said, hey, if you're having a difficult time making your mortgage payments, you can skip your payments. Well, now I'm getting a lot of calls about people now. The mortgage company is saying, okay, well, we're done with COVID. How are you going to pay? When are you going to pay? And so I don't want you to be nervous because these banks really don't want your house back, but you need to know what your rights are and how you should go about getting your situation resolved. Now, the first thing that you can do is you can reinstate the loan. And reinstating the loan means that you pay all the past due and bring your payments current. Well, a lot of people don't have 12 months worth of payments saved up. So now that is going to create a problem for them. So you can ask for additional time on your forbearance to give you some more time. And you can do this, and it depends on who owns your loan. Now, just because you pay Bank of America or you pay Wells Fargo, that does not mean that they own your loan. They may be the servicer to your loan. That means that if you have an FHA loan, guess what? Your loan is federally backed. If you have a VA loan, that means that it's federally backed. If you have a USDA loan, it is federally backed. If you have a Freddie Mac loan, that means it's federally backed. That means that they have to follow the, hey, one and only Graham, thank you for tuning in. That means that they have to follow government guidelines before they can proceed with foreclosure. Now, if you have a conventional loan that may not be backed by Freddie Mac or Fannie Mae, then you may fall under different guidelines. So the first thing is knowing who owns your loan, and that will tell you a lot of what your options are. And again, like I said, they want the money. They don't really want your house. So you can ask for an extension on your forbearance if you are not ready to start paying as of not yet. And if you're not sure, that means that you can continue to skip payments. Also, you can ask for a loan modification. And a loan modification is where they allow you to modify the loan. That means you can adjust the terms of your loan. And they can be terms or interest rate. So that means, hey, you had a 30-year mortgage. Maybe we need to extend it out to a 40-year mortgage and then lower your payment. Or that means that we can work with the interest rate, modify your interest rate. You were at 5%. Now we can bring you down to 2%. Or we can say, okay, we're going to take you from a 30-year loan to a 33-year loan. So you can ask for different terms, and that's what a modification is. And the modification can either be temporary or it can be permanent. But if you can get a permanent one and it's an overall better situation for you, then I would suggest you do that. But say that they give you they tell you, okay, well, we're going to modify your terms. You were supposed to pay us $700 a month, but if you pay us $1,000, you can get caught up. So they can modify where the payment can either go up or down, or they can extend the terms, or they can adjust your rate. So you may want to ask them for a loan modification. The next thing is that you can ask them to set aside your past due. Now, some of them will do it as a second mortgage. FHA calls it a partial claim, where they'll set it to the side, you don't make any payments on it, and then they continue just to let you pay your mortgage. So you can get a partial claim if you're under FHA, or you can ask them if they will set the past due to the side, and it serves as like a second mortgage on your loan. So you can do that as well. And you want to know what all your options are. And the way that you do that, you're going to need to contact the loss mitigation department of your mortgage company. Again, that's the loss mitigation department with your mortgage company. They are the ones that give you assistance. They are the ones that will be reviewing your profile. Now, if you get a person on the phone and they tell you, oh, no, we can't do anything to help you, you just need to pay. You need to escalate the call to a supervisor. Escalate the call to a supervisor, because they got what they call gatekeepers. They got people that don't care about their job. You think about the people that are at your job. They don't either know their job or they don't care about their job, and they just want you off the phone. Well, this is something very critical to you, so you don't want a gatekeeper or somebody that's not serious about their job not helping you. So you want to make sure that you're asking for all remedies to your situation. So if you need to escalate the call to a supervisor. Also, you can do what they call deed in lieu. I highly do not recommend this, and it's not financial advice, but I highly do not recommend that you take this as one of your options, because so many homes have equity right now. That means that based on what you owe, the difference between what you owe and what you can actually sell your house for is probably, even if it's $5,000, $10,000, that money could come to you. So in this market, without I would not do a deed in lieu without checking with a real estate agent like myself and getting what they call a CMA, a competitive market analysis. Because if you don't want the house anymore and you just want to move on, or you want to move to another state or whatever, I highly recommend that you do not do a deed in lieu in this market. The deed in lieu means that you just sign it back over to the bank and they say, okay, we're going to take the house back and you move on with your life, and we're going to move on with disposing of the property. But I highly do not recommend that, because in most areas, most people have equity. Most people have equity. So I would highly recommend that you not do the deed in lieu. The next thing is a next option is a short sale. You don't want to do a short sale either, because that means selling the house for less than what you owe on the property. Do not do that, because of the fact that a lot of houses right now have equity. You could be sitting on a gold mine. You could have enough equity to go buy you another house cash and don't even worry about your mortgage getting paid. Now, remember, just because you're past due on your mortgage does not mean you waive your rights. You still own the property. You own the property up until they take you to a foreclosure sale where they auction your house off. Now, they can put you on notice, they can tell you to come into court, but for the most part, you own the property until it's auctioned off. So even if you're not making payments, you still can sell the property. You still, if you can find a bank that will refinance you, because a lot of these people, if you bring it out of the COVID relief, they did not report any late payments on your credit. So your credit score may not have been affected by your forbearance. So you can still get it refinanced. You can still look at selling the property or request these options. Again, let's go over the options again. You got where you can do a modification. That means that you can adjust the terms of the loan. That means that you can say, instead of a 30-year loan, I want a 40-year loan. Instead of 5%, 2% interest rate. So you can do the modification. You can ask for an extension on the forbearance. That's where you continue not to make payments. Also, you can ask for the set aside, where they set it to the side. And remember, under FHA, that's called a partial claim, where they can set the past due to the side, or they can put the past due into the principal and just add the time onto the time that you have to pay them and your number of months. So you can get the past due put back into the principal, or you can make a modified payment, such as if your payments are $700, now you're going to put an extra $300 for the next 2 or 3 years to get caught up. You can do that too, because remember that you can do a modification, you can do a forbearance, but I highly do not recommend, I can't stress this enough, do not recommend that you do a deed in lieu or a short sale in this market without consulting with a real estate agent first, because like I said, so many people are sitting on gold mines right now, and you really could be getting a lot of money that could change your life. So make sure that you ask for what they call a CMA, which is a competitive market analysis of your home if it's a property that you do not want anymore. So that way you can determine if you have equity or not. Remember that if the operator on the phone is not being compliant or not being helpful, escalate the call. That means ask to speak to a manager. You want to speak to a manager in the loss mitigation department, because they specialize in helping people that need to get their mortgage situated and back on track. So again, if you do not have any help from your representative or the person that's assigned to your file, the next thing would be, if your mortgage company is not helping you or responding to you, as a last resort, you can file a complaint with the banking commission, and they have to answer them. So you can do the file a complaint with the banking commission if it gets that bad where you cannot get any resolution. Ask for the loss mitigation packet. Make sure you completely fill out your packet. Provide them with all your financials, because they have to see your financials in order to know what you qualify for. So you're going to ask for that packet, help you get on track, and I hope that everyone is successful. If you want to stay in your house, there are solutions for that. And if you want to get paid and sell your house, there are solutions for that. So you can contact me if you need a CMA to kind of know, okay, Erica, should I sell my house or should I stay? And if you know you're going to get $200,000, which is a game changer for most people, you might say, I don't want to stay. And remember, it's your house until it's auctioned off. They just have a lien, but you are the owner of the property. They just have a lien, which is separate, that protects their interest in the property, but it's your property, and you can do what you need to do to fit your situation up until they auction the property off. I hope that this video helps you or helps somebody else. And remember, we don't always know what battles people are fighting. So I would suggest you forward and share this video, like it so that it can come up in your news feed, so that you can spread this with somebody, and it may save their house or put them in a better financial situation if they are needing help.